Ever wish you could like sneak a peek behind the curtain at a big tech company
Yeah.
and see how the like financial gears are turning?
Uh-huh.
Well, that's kind of what we're doing today. We're putting on our financial detective hats,
Oh, nice.
and we're going deep into Oracle Corporation's recent Form 10Q filing,
Okay.
which is basically their quarterly report card on how they're doing.
Yeah, their finances, everything, money.
Yeah.
It's fascinating because we're not just looking at like the headlines, you know?
Right.
We're digging into the raw data, the numbers.
Yeah.
This isn't just about understanding Oracle, it's about learning to analyze any company's performance.
Exactly.
Like, think of it as a masterclass in financial detective work.
We're going to be talking balance sheets, revenue streams,
The whole 9 yards.
the whole 9 yards.
Yeah,
But don't worry, we're going to translate all that Wall Street jargon into plain English
absolutely.
and uncover the juicy insights that matter most to you.
Yeah, by the end of this, you'll be able to impress all your friends with your financial savvy. You might even start spotting investment opportunities
I love that.
that others miss.
Okay, let's get started.
Let's do it.
First things first. Who is Oracle, and why should we care about their financials?
Well, Oracle is a total behemoth in the tech world.
Yeah.
But they're not just a software company anymore.
Right.
They've got their hands in everything from cloud computing to hardware to like consulting services.
Right, they're kind of like the Swiss Army knife of the tech industry.
Yeah, exactly.
And their stock, it's traded on the New York Stock Exchange under the ticker symbol ORCL.
Yeah.
Is a major player in the market.
Huge player. And speaking of size,
Oh.
as of December 6th, 2024, they had over 2.7 billion shares of common stock outstanding.
Though, 2.7 billion.
Yeah.
That's more shares than some countries have, people.
Yeah, it gives you an idea of their scale, their sheer size.
So they're big, they're publicly traded, headquartered in Austin, Texas.
Austin, smart move. It's a tech hub.
Yeah.
Vibrant culture, lower cost of living than Silicon Valley. They're clearly thinking about attracting top talent.
Good point.
Yeah.
Okay, so we've established Oracle is a major player.
Mm-hmm.
Now let's roll up our sleeves and get into the nitty-gritty of their
Fascinating.
financials.
Okay.
Where do we even begin with something as massive as Oracle's balance sheet?
Let's demystify this whole balance sheet thing.
Okay.
It's actually simpler than it sounds.
Oh.
Think of it like a snapshot
Okay.
of what Oracle owns their assets and what they owe their liabilities.
Okay.
It's like a basic health check for any company.
Okay, I'm getting a financial checkup vibe here.
Exactly.
So what vital signs should we be checking on Oracle's balance sheet?
First, let's look at their cash and cash equivalents.
Okay.
As of November 30th, 2024,
Mm-hmm.
they had a whopping $10.9 billion on hand.
Whoa. I'm seeing dollar signs.
It's a war chest.
But seriously, what does that massive cash pile tell us about Oracle's strategy?
Well, it gives them options. With that kind of cash, they could go on an acquisition spree,
Ooh.
buy back a ton of their own stock,
Yep.
or even issue a special dividend to shareholders.
Wow.
It all depends on their priorities.
So it's like they're holding all the high cards
Yeah,
in a poker game.
exactly.
What else on the balance sheet jumps out at you?
Take a look at their property, plant, and equipment.
Okay, property, plant, and equipment.
And this isn't just office furniture.
Right.
We're talking serious investments in infrastructure, particularly data centers,
Okay.
to support their cloud ambitions.
The data centers. I know those are important for the cloud.
Huge.
But can you break down why they cost so much?
Imagine giant warehouses
Okay.
packed with servers, cooling systems, backup generators, the whole shebang.
Wow.
It's a massive upfront investment.
Okay.
But for Oracle, it's the price of admission to the cloud game.
So they're betting big on the cloud,
Big time.
even if it means spending a lot up front.
Uh-huh.
Makes sense, considering how much we hear about their cloud revenue growing.
Yeah, for sure.
But before we get to that, anything else on the balance sheet that's worth noting?
Now, here's something interesting. Goodwill.
Goodwill,
And this isn't about being nice.
right?
It's about the premium Oracle paid when they bought other companies.
Oh, okay.
It reflects things like brand value, customer relationships, stuff that's hard to put a dollar figure on, but adds to Oracle's worth.
Well, it's just like the extra oomph
Yeah, exactly.
they paid to bring other companies under their umbrella.
Uh-huh.
Interesting. Okay, so we've covered assets and liabilities.
Yep.
Now let's see how money is flowing in and out.
Okay.
It's time to examine their income statement, right?
You got it. And you might have heard it called by its fancy name,
Okay.
the Condensed Consolidated Statements of Operations.
Right, that's a mouthful.
It is.
So this is where we see their various revenue streams, how much they're spending.
That's right.
Okay, hit me with highlights. How's Oracle bringing in the big bucks?
They have 4 main revenue sources. cloud services and license support, cloud license and on-premise license, hardware, and services.
Okay, so basically a mix of traditional software licensing.
Right. A cloud subscriptions,
Yep.
actual hardware sales,
Right.
and then consulting type services on top of that.
You got it. And here's where it gets really interesting.
Okay.
Their cloud services and license support segment is booming.
It is, yeah.
This tells us they're successfully riding the wave of the industry's shift towards cloud computing.
Yeah, that makes sense.
Yeah.
Everyone seems to be moving to the cloud these days.
For sure.
But what about those other revenue streams,
Yeah.
like hardware?
Yeah. Good question.
Are they holding their own?
Actually, hardware revenue has taken a dip.
It has.
It has, which makes you wonder how Oracle plans to address that moving forward.
Right.
Are they going to double down on cloud even further?
Yeah.
Will they try to reinvigorate their hardware offerings?
Interesting. It'll be interesting to see how that plays out.
Yeah, definitely.
And speaking of interesting, you mentioned they're spending a lot.
Oh, yeah.
What's eating up their budget?
Well, no surprise here, but cloud services and license support expenses are a big chunk.
They're investing heavily to support that revenue growth, which again shows their commitment to the cloud.
Makes sense.
Grow the cloud, spend on the cloud.
The cycle, anything else they're spending big on?
Research and development.
Okay, R&D.
They're pouring money into it.
Okay.
This tells us they're not just content with their current offerings.
Right.
They're actively trying to innovate and stay ahead of the curve in a rapidly changing tech landscape.
Right, they can't just rest on their laurels. The tech world moves fast.
Exactly. Way too fast.
Okay, so we've got a decent grasp of their overall financial picture. But we also know that Oracle isn't just one giant blob.
Right.
They have different business segments.
They do, yeah.
So,
They've got their three main segments: cloud and license, hardware, and services.
okay, and each one kind of has its own unique story to tell
They do.
in terms of revenue trends and profitability and
Yep.
challenges that they're facing.
Exactly.
Okay, let's dive into each of those segments.
Let's do it.
Cloud and license seems like the obvious place to start.
Yeah, I think so.
That's their bread and butter now, right?
It really is. And as we've already touched on, the proportion of revenue they're getting from cloud services is growing steadily.
Yeah.
It's a clear indication of the industry's direction and Oracle's successful adaptation.
But with great growth comes great responsibility
That's right.
and expenses, as we've
Yeah.
discussed.
Yeah.
What are the key things to understand about this segment's financials?
We know that cloud revenue is on the rise, but they're also dealing with significant expenses to
Yeah.
support that growth,
Right.
building and maintaining those data centers we talked about, developing new cloud-based services,
Right.
and providing ongoing support. It all adds up.
So they're playing the long game here,
Yeah.
investing heavily N now W with the hope of reaping greater rewards in the future.
Exactly. Long-term vision.
It's a calculated risk.
It is.
What about the hardware segment? We know it's been struggling, but what does the Form 10Q tell us about why that is?
Well, one thing that stands out is that their hardware business has lower profit margins
Okay.
compared to the cloud and license segment.
Interesting.
This is likely due to the inherent costs of production and distribution
Right.
associated with physical hardware.
Right. It's a lot more expensive to build and ship servers
Yeah.
than it is to just like deliver software over the internet.
Exactly. Way easier to send ones and zeros.
Right. That makes sense. But it must be more than just cost.
Yeah.
What else is impacting the hardware business?
Competition.
Okay.
The cloud has become a major competitor to traditional on-premise hardware.
That's true.
Companies are increasingly opting for cloud-based solutions
Yeah.
for their IT infrastructure, which puts pressure on Oracle's hardware sales.
So it's a double whammy.
Yeah.
Higher costs and tougher competition.
Yep.
That's a recipe for a challenging business environment.
For sure.
What about the services segment? Where does
Yeah.
that fit into the big picture?
Services are crucial for Oracle because they help maximize the value customers get from their technology investments,
Right.
whether those investments are in cloud, on-premise software, or hardware.
So it's like the glue that holds everything together.
Exactly.
What kinds of services are we talking about here?
Things like consulting, implementation, training, and ongoing support.
Okay.
These services help customers get the most out of their Oracle solutions and ensure they're successful.
So it's not just about selling a product. It's about building long-term relationships with those customers
It is.
and helping them achieve their business goals.
That's right.
That makes a lot of sense. Okay, we've got a good handle on their three main business segments. but there's more to the story, really.
Hmm.
Tell me about Oracle's strategy for acquisitions and investments.
Oh, yeah, for sure.
They're known for being pretty acquisitive, right?
They are. They've got history of buying up companies to expand their offerings and reach new markets.
Hmm.
And one investment in particular caught my eye in the Form 10Q.
Okay.
Ampere Computing Holdings LLC.
Ampere Computing. What's so special about them?
Well, Oracle owns a significant stake in Ampere, about 29%. And
Okay.
it seems like they're really betting on this company's long-term potential.
Interesting. What's even more interesting
Yeah.
is that Oracle has the potential to gain control of Ampere in the future.
Oh, wow.
Wait, so they're invested in Ampere, but they might end up owning the whole thing?
Yeah.
Why not just buy them out right now?
Good question. There could be strategic reasons for this phased approach.
Yeah.
Maybe they want to assess Ampere's performance over time before fully committing,
Mm-hmm.
or perhaps there are regulatory hurdles they need to clear first.
Makes sense.
It definitely adds intrigue.
Ooh, I love a good business mystery. And what does Ampere actually do? What's
Yeah.
their business all about?
They develop server chips.
Okay.
It's a competitive market, but Oracle clearly sees value in Ampere's technology and believes it could play a key role in their cloud infrastructure offerings.
So this ties back to their cloud strategy.
It does.
They're investing in a chip company
Yep.
to potentially gain an edge in cloud computing.
Exactly.
Very clever. Okay, let's shift gears a bit and talk about something that directly impacts investors.
Okay.
Stockholder matters.
All right.
What kind of insights can we glean from the Form 10Q in that area?
Well, there are a few things worth noting.
Okay.
First, Oracle has been actively repurchasing its own stock.
Oh, yeah, stock buybacks?
Yep, this
Okay.
is a common practice for companies with extra cash on hand.
Yeah.
And it signals that they believe their stock is undervalued.
Right. It's like they're saying, we believe in our company so much that we're buying back our own shares.
Exactly.
And they've got a lot of money left to do just that right.
That's right. About $6.7 billion is still available for repurchases,
Well,
suggesting they're not done yet.
so they're going to keep buying back those shares.
It's like it.
Okay, now this next one might sound familiar. Dividends.
Ah, yes. Dividends. It's like a little bonus for being a shareholder.
I love dividends.
A slice of the profits delivered right to your pocket.
Delicious.
Dividends are a classic way for companies to share their earnings with their investors.
Right.
It's a sign of financial strength and stability,
Yeah,
and it can make a stock more attractive to income-seeking investors.
makes sense.
Yeah.
Oracle recently declared a quarterly cash dividend,
They did.
keeping up their history of rewarding stockholders.
It's a good track record.
Yeah, consistency is key.
Absolutely.
It's reassuring to know that a company is committed to rewarding its shareholders, even when times are tough.
Especially when times are tough.
But what about employee compensation?
Yeah.
How is Oracle using stock to attract and retain talent in such a competitive industry?
They're big on stock-based compensation,
Okay.
specifically restricted stock units or RSUs.
Okay, RSUs. So break that down for me.
Yeah.
What does that mean? And why would a company do that?
Okay, so imagine you're an employee at Oracle.
Okay.
Instead of just getting a salary, you also receive these RSUs.
Oh.
These are basically promises of shares in the company.
Okay.
But there's a catch.
What's the catch?
You don't actually get those shares until certain conditions are met.
Okay.
Usually related to how long you've worked at the company
Mm-hmm.
or whether you've hit certain performance goals.
So it's like a delayed gratification thing.
Exactly.
You work hard, you stick around, and eventually you get those shares.
You got it.
But why would a company go through all that trouble?
It's a win-win for both the company and the employees. For the company, it's a way to incentivize employees to think long-term,
Okay.
align their interests with those of the shareholders.
Okay.
If the company does well, the stock price goes up and everyone benefits,
Right.
including those employees who hold RSUs.
So it's like a built-in motivation booster.
Exactly.
Instead of just working for a paycheck,
Yeah,
they're working to grow the value of their own shares.
that's right.
That makes a lot of sense.
And for Oracle, it's a powerful tool for attracting and retaining top talent
Yeah.
in a competitive industry.
Yeah, that's true.
It's hard to say no to a job offer that comes with the potential for a big payday if the company's stock takes off.
Right, because who wouldn't want a piece of a multi-billion-dollar tech giant?
Exactly.
So it's a way to share the wealth
Uh-huh.
and create a more engaged and motivated workforce.
For sure.
It seems like Oracle is being quite strategic
They are.
in how they approach stockholder matters.
Yep.
balancing the needs of both investors and employees.
Absolutely. It's a delicate balancing act.
Yeah.
But so far, they seem to be doing a good job of walking that tightrope.
Okay, we've covered a lot of ground here.
We have.
Oracle's identity, their financial performance,
Yeah.
their different business segments, their investments,
Mm-hmm.
and even shareholder matters.
We've been busy.
But no company is without its risks, right?
That's true.
What are some of the key risks and challenges Oracle faces,
Okay.
according to the Form 10Q?
Well, like any major corporation, Oracle has some legal proceedings on its plate.
Okay.
There's a copyright infringement case mentioned,
Ugh.
though they seem confident in their defense.
Okay.
It's important to acknowledge those legal risks,
Mhm.
but it's not unusual for a company of Oracle's size to have some ongoing legal battles.
Right, so legal skirmishes are par for the course.
Exactly.
What about competition? That's always a factor in the tech world, right?
Absolutely.
Yeah.
The Form 10Q explicitly mentions the intensely competitive landscape,
Okay.
particularly in the cloud services market.
Right, so they're up against some formidable rivals,
They are.
like Amazon and Microsoft.
Yeah, some big names.
It's like a clash of the titans.
It is.
Each one with its own strengths and weaknesses,
Mhm.
constantly innovating and
Yeah.
trying to outmaneuver the other.
Big time.
How is Oracle positioning themselves in this battle royale?
They're investing heavily in their cloud infrastructure,
Okay.
as we've already seen.
Right.
And they're also focusing on developing innovative solutions
Okay.
that cater to specific industries and use cases.
Okay.
They're trying to differentiate themselves by offering tailored cloud services that meet the unique needs of their customers.
So it's not just about offering the cheapest or the most powerful cloud platform.
Right?
It's about providing solutions that solve real-world problems for businesses.
Exactly. That's the key.
It's a smart approach.
It is.
But even with the best strategy, Oracle can't control everything.
That's true.
Right.
Yeah.
The global economy can have a huge impact on any business,
Huge.
especially one that relies on corporate spending for its revenue.
Absolutely, yeah.
Yeah.
The Form 10Q also highlights general economic conditions as a potential factor that
Right.
could influence Oracle's performance.
Right.
A downturn in the economy could lead to reduced IT spending,
Yeah.
which could hurt their bottom line.
Businesses tend to tighten their belts during economic downturns.
They do.
And IT projects are often the first to get cut.
Unfortunately,
It's a sobering thought.
it is.
Even a company with Oracle's size and resources
Mm-hmm.
is vulnerable to the whims of the global economy.
It's true. No one is immune to those macroeconomic forces.
So many factors at play.
It is like a giant chess game
It is.
where you have to anticipate your opponent's moves while also keeping an eye on the overall state of the board.
Anything else in the Form 10Q that we should flag for our listeners?
Yes.
Before we wrap up this part of our deep dive?
It's crucial to remember that the Form 10Q contains forward-looking statements.
Okay, forward-looking statements.
Yeah, these are essentially predictions about the future, and
Okay.
as we all know, predictions aren't always accurate.
Right. The future is always uncertain.
Exactly. Always full of surprises.
So it's important for investors
Yeah.
to take those forward-looking statements with a grain of salt
Uh-huh.
and understand that they're based on assumptions and projections
Right.
that might not pan out.
Yeah. Things change. New information comes to light. It's unpredictable.
We can analyze the past and present,
Yeah.
but the future always holds some surprises.
Always.
Okay, we've covered a lot of ground in this first part of our Oracle deep dive.
We have.
We've explored their identity, their financials,
Mm.
their business segments,
Yep.
their investments, stockholder matters, and even the risks they face.
Phew, I'm exhausted.
But there's still so much more to uncover.
Yeah?
Join us for part 2
Yeah, can't wait.
as we continue to explore the fascinating world of Oracle Corporation's finances.
It's gonna be good.
We'll be dissecting their cash flow
Ooh, juice.
and peering into their long-term prospects.
The crystal ball.
Stay tuned.
See you there. Welcome back to our deep dive into Oracle Corporation's Form 10Q.
We're picking up right where we left off.
Yep.
Hot on the trail of clues about Oracle's financial health
Yeah.
and future prospects.
And trust me, there's still plenty to uncover.
I bet.
Last time, we laid the groundwork.
Well-
We explored their identity,
Hmm.
their balance sheet, their diverse business segments.
Right. We saw how they're making money. That booming cloud business is definitely catching everyone's attention.
Yeah, for sure.
But also where they're facing headwinds,
Right.
like that dip in hardware revenue.
Exactly. But now, let's shift our focus to a topic that's especially intriguing.
Okay, what's that?
Oracle's approach to rewarding their stockholders.
Ooh, Stockholder matters.
This is where things get really interesting because it reveals a lot about their priorities and their long-term vision.
Okay, I'm intrigued.
So as we saw in their Form 10Q,
Yeah.
Oracle has been actively repurchasing their own stock.
Stock buybacks.
They've already spent a considerable amount,
Wow.
and they still have a substantial sum set aside for future buybacks.
So they're putting their money where their mouth is, essentially.
Exactly.
It's like they're saying, we believe our stock is a bargain,
Yeah.
so we're going to snap up as many shares as we can.
Precisely. By buying back shares, they're reducing the number of outstanding shares, which can increase the value of the remaining shares.
Okay.
It's a classic way to boost earnings per share and potentially drive up the stock price.
Makes sense from a financial perspective, but I'm curious about, the signaling aspect.
Oh, yeah.
What message does this send to the market
Yeah.
when a company buys back its own stock?
It's a powerful signal of confidence.
Okay.
It tells investors that the company believes its stock is undervalued
Yeah.
and that they see a bright future ahead.
Okay.
It can also be interpreted as a way to return value to shareholders,
Right.
especially when compared to other options like dividends.
Ah, yes. Dividends, speaking of which.
The sweet taste of passive income.
Oracle just declared a quarterly cash dividend,
Delicious.
which is great news for income-seeking investors.
Absolutely. Dividends are like a little bonus
They are.
for being a shareholder, a share of the profits,
That's right.
delivered straight to your pocket.
Straight to your pocket.
And for Oracle, it's a way to demonstrate
Their financial strength and stability while rewarding those loyal investors,
that's the key.
especially in a volatile market.
Yeah,
A steady dividend can be a comforting thing.
for sure.
It's a way to generate some passive income
Yep.
while riding out those ups and downs.
Absolutely. Dividends can be a valuable part of a diversified investment portfolio.
Absolutely.
And it's worth noting that Oracle has a history of paying consistent dividends,
They do.
which makes them a reliable choice for income investors.
Consistency is key.
It is.
It's reassuring to know that a company is committed
Hmm.
to sharing its success with its shareholders,
Yeah,
even when times are tough.
especially when times are tough.
But let's not forget about another group of stakeholders
Okay.
who play a vital role in Oracle's success.
Mm-hmm.
Their employees.
Right. The people who make the magic happen.
Right. They're the ones who are building the products,
Yeah.
closing the deals,
Uh-huh.
driving the innovation.
That's right.
That makes Oracle a leader in the tech world.
And Oracle, being a tech company, is known for offering some pretty enticing compensation packages
Yeah, they do.
to attract top talent.
Absolutely. And a key part of those packages
Yeah,
is stock-based compensation.
it is.
Oracle is big on granting restricted stock units,
Yeah.
or RSUs,
Yep.
to its employees.
It's a way to give them a piece of the pie, so to speak.
Okay, I'm seeing stock-based compensation here, but can you explain
Yeah,
what that means in plain English?
sure.
And why would a company do that?
Yeah.
Wouldn't it be simpler to just pay everyone in cash?
So imagine you're an employee at Oracle.
Okay, I'm an employee.
Instead of just getting a salary,
Okay.
you also receive these RSUs.
Okay.
These are basically promises of shares in the company. But there's a catch.
there's always a catch.
You don't actually get those shares until certain conditions are met,
Okay.
usually related to how long you've worked at the company or whether you've hit certain performance goals.
So it's like a delayed gratification thing.
Exactly.
You work hard, you stick around, and eventually you get those shares.
That's right.
But why would a company go through all that trouble?
Well, it's a win-win for both the company and the employees.
Okay.
For the company, it's a way to incentivize employees to think long-term,
Okay.
align their interests with those of the shareholders.
Okay.
If the company does well, the stock price goes up, and everyone benefits,
Right.
including those employees who hold RSUs.
It's like a built-in motivation booster.
It is.
Instead of just working for a paycheck,
Yeah,
they're working to grow the value of their own shares.
exactly.
Makes a lot of sense.
And for Oracle, it's a powerful tool
All right.
for attracting and retaining top talent in a competitive industry.
That's true.
It's hard to say no to a job offer
Yeah.
that comes with the potential for a big payday
Right.
if the company's stock takes off.
Right. Because who wouldn't want a piece of a multi-billion-dollar tech giant?
Exactly.
So it's a way to share the wealth and create a more engaged and motivated workforce.
For sure.
It seems like Oracle's being quite strategic
They are.
in how they approach stockholder matters.
Yep.
balancing the needs of both investors and employees.
Precisely. They're focused on maximizing shareholder value through buybacks and dividends,
Right.
while also using stock-based compensation
Yeah.
to incentivize their employees and attract top talent.
It's a delicate balancing act,
It is.
but so far they seem to be doing a good job of walking that tightrope.
Yeah, they've got a good track record.
Okay, we've delved into this fascinating world of Oracle's financials, their business segments, their strategic investments, and their approach to stockholder matters.
That's right.
But even the most successful companies face challenges.
Oh, absolutely.
Right.
Yeah.
The Form 10Q usually has a section dedicated to risk factors.
It does.
And I'm curious to hear what Oracle is highlighting.
That's right. Every business has its vulnerabilities. And Oracle is no exception.
Yeah.
The Form 10Q is actually quite transparent about the potential risks
Okay.
and challenges that investors should be aware of.
Okay.
It's like a warning label for investors, urging them to proceed with caution.
I'm ready to put on my hazard suit.
Okay.
What are some of the biggest red flags waving in Oracle's direction?
Well, one of the most prominent risks for any tech company, especially one in a rapidly evolving industry like Oracle, is competition.
Of course.
The tech world is a battleground, with companies constantly vying for market share and dominance.
It's like a constant game of chess.
It is.
Where one wrong move can cost you dearly.
And Oracle is in a particularly fierce fight, especially in the cloud services arena.
Right.
They're up against some of the biggest names in tech, like Amazon Web Services, AWS, and Microsoft Azure.
Oh, yeah.
These are titans of the industry,
Yeah.
with massive resources and global reach.
That's like a clash of the titans.
It is.
Each one with its own strengths and weaknesses, constantly innovating and trying to outmaneuver the other.
Big time.
How is Oracle positioning themselves in this battle royale?
Well, they're investing heavily in their cloud infrastructure, as we've already seen.
Right.
And they're also focusing on developing innovative solutions that cater to specific industries and use cases. They're trying to differentiate themselves by offering tailored cloud services that meet the unique needs of their customers.
So it's not just about offering the cheapest or the most powerful cloud platform.
Right.
It's about providing solutions that solve real-world problems for businesses.
Exactly.
It's a smart approach.
It is.
But even with the best strategy, Oracle can't control everything. Right?
That's true. Yeah.
The global economy
Yeah.
can have a huge impact on any business,
For sure.
especially one that relies on corporate spending for its revenue.
Absolutely. The macroeconomic environment is a wild card.
Yeah. That no company, not even a tech giant like Oracle, can fully control.
Right.
A global recession, for example, could lead to reduced IT spending, which would directly impact Oracle's sales.
Right. Businesses tend to tighten their belts
They do.
during economic downturns.
Yep.
And IT projects are often the first to get cut.
Unfortunately, yeah.
It's a sobering thought.
It is.
Even a company with Oracle's size and resources is vulnerable to the whims of the global economy.
Well said, and it's something investors need to keep in mind.
Absolutely.
The Form 10Q also flags some company-specific risks, such as the potential impact of acquisitions.
Right.
Oracle has a history of making bold acquisitions.
They do.
But those deals can sometimes backfire.
Right.
Especially if the integration process is messy.
Yeah.
Or if the acquired company doesn't live up to expectations.
Right. Acquisitions can be a double-edged sword. They can fuel growth and expansion.
But they can also be disruptive and lead to integration challenges.
Absolutely.
It's a risky game. But Oracle seems to have a good track record so far.
They've definitely made some shrewd moves over the years.
Yeah.
And their acquisition strategy has played a key role in their growth. But it's something to watch closely as any misstep could have a significant impact on their financial performance.
Okay, competition, the global economy, and the risks of acquisitions. Those are some pretty hefty challenges.
They are.
Anything else in the risk factors section
that
jumps out at you?
There's one more risk factor I think is worth highlighting, especially in light of our discussion about Oracle's cloud strategy and their reliance on highly skilled engineers and developers to drive innovation.
Yeah.
The dependence on key personnel.
The brain drain risk.
Exactly.
It's a valid concern.
It is, especially in the tech world.
Yeah.
Where innovation is everything.
Yeah.
Losing a brilliant engineer
or a visionary leader could be a major setback.
Absolutely.
Oracle has a talented team.
Right.
But they're not immune to the risk of losing key personnel to competitors or other opportunities.
It's a constant battle to attract and retain top talent.
It is.
And any disruption in that area could hinder their progress.
Absolutely.
So it's not just about having a great product or a solid strategy.
Right.
It's also about having the right people in place
to
execute that vision.
That's key.
It's about fostering a culture that attracts and retains top talent and ensures a smooth transition if a key player decides to move on.
Precisely. And it's something investors should consider when evaluating a company.
Absolutely.
Do they have a deep bench? Are they investing in their employees' development?
Right.
And creating a work environment that fosters loyalty and innovation?
Yeah. Those are all really important questions to ask.
They are.
Great point. Okay, we've covered a lot of ground
in this second part of our Oracle deep dive.
It's been a whirlwind.
We've explored their approach to stockholder matters.
Yep.
Their commitment to employee compensation. And the various risks and challenges they face.
That's right.
We've seen their strengths and their vulnerabilities.
The good and the bad.
It's like we've gotten a behind-the-scenes look.
Yeah, exactly.
The inner workings of a tech giant.
And I think it's important to remember that while Oracle is a publicly traded company, with all the complexities that come with that, it's also a collection of individuals, talented engineers, visionary leaders, and dedicated employees, all working together to build something remarkable.
Absolutely.
Their success or lack thereof will ultimately depend on the decisions they make, the risks they take, and their ability to adapt to a rapidly changing world.
Well said. But our exploration isn't over yet.
No, it's not.
There's still more to uncover as we delve deeper into Oracle's financial strategies and their vision for the future.
Exactly. In the final part of our deep dive, we'll examine one of the most critical aspects of any business. Cash flow.
Ooh, cash flow. The lifeblood of any business.
Exactly. We'll trace the flow of money in and out of Oracle. And we'll see how they're using their financial resources to fuel their growth and navigate the challenges ahead.
I'm ready. Let's follow that money.
Stay tuned.
Welcome back to the deep dive. We've been on quite a journey through Oracle's financial statements.
We have.
Their business segments, strategic moves, the risks they face.
It's been a wild ride.
We've seen their impressive cash pile.
Yeah, that war chest.
That ambitious cloud strategy.
Definitely ambitious.
And their commitment to rewarding both investors and the employees.
Gotta keep everyone happy.
Right. But even after all that,
there's
one crucial piece of the puzzle we haven't fully explored yet.
And what's that?
Cash flow.
Yes. Cash flow.
It's often said that cash is king.
It is, absolutely.
Of the business world.
Cash is king, and for good reason.
I've heard that saying, but I've never really understood why cash flow is so important. Isn't it enough for a company to be profitable?
Well, profitability really is important.
Right.
No doubt.
Yeah.
But it's not the whole story.
Okay.
A company can be profitable on paper, but still struggle if it doesn't have enough cash on hand to meet its short-term obligations. Think of it this way. Profit is like your paycheck. But cash flow is like the money you actually have VE in your checking account.
That makes sense.
Yeah.
You need cash to pay your bills.
You do.
Even if you've earned a lot of money on paper.
Exactly.
So how does Oracle measure up when it comes to cash flow?
Let's dive into their cash flow statement and find out.
Let's follow the money trail.
All right.
Where is Oracle's cash coming from?
Well, their biggest source of cash is, not surprisingly, their operations. So specifically the cash they collect from customers for their cloud services and license support agreements. This recurring revenue stream is like a steady river.
I like that analogy.
Yeah.
A steady river flowing into Oracle's coffers.
Exactly. It gives them a lot of predictability and stability.
Right. That recurring revenue model.
Yep.
The holy grail of many businesses these days.
It is, especially in a volatile market.
Exactly. But Oracle isn't just sitting on that cash, are they?
No, they're not.
They're investing it back into the business, right?
Absolutely. One of their biggest areas of investment is capital expenditure.
CapEx.
Or CapEx, as it's often called.
Yeah.
This is the money they're pouring into building and equipping their data centers to support those cloud ambitions.
As we discussed earlier, those data centers are expensive.
They are very expensive.
But essential for Oracle's cloud strategy.
Yeah, they're essential if they want to play in the cloud game.
Right. They need that robust infrastructure to compete with the likes of Amazon.
Yeah. And Microsoft in the cloud arena.
Exactly. Got to keep up with the big boys.
Right. But all that spending must be putting a dent in their cash flow, right?
It's true that capital expenditures can put a strain on cash flow in the short term. But Oracle has a strong cash position.
They do.
And they're generating significant cash from their operations.
Right.
So they're well positioned to handle these investments.
Okay.
They're playing the long game here.
They are.
Investing now to build a world-class cloud infrastructure that will generate even greater cash flow in the future.
It's a strategic balancing act, spending money to make money.
It is, for sure.
What about other areas of spending? Where else is their cash going?
Well, acquisitions are another major area of investment for Oracle.
Right. They're known for those acquisitions.
They are. They've got a long history of acquiring companies to expand their offerings and reach new markets. And while acquisitions can be a great way to fuel growth, they can also be costly in terms of cash outflow. Right? I imagine it's like a high-stakes poker game.
Yeah, it is.
You have to weigh the potential benefits of an acquisition against the impact on your cash flow.
You gotta know when to hold them, know when to fold them.
Exactly. And Oracle seems to be taking a strategic approach.
They are
Carefully selecting acquisitions that align with their long-term goals.
Right. They're not just buying companies for the sake of it. They're making calculated moves to enhance their competitive position and drive future growth.
And they're using their strong cash flow to fund these acquisitions.
They are.
Which allows them to maintain their financial flexibility.
Exactly. It's all about optionality.
So it's all about having the financial firepower to seize opportunities when they arise.
Exactly. Got to be ready to strike.
But it's not just about spending, is it?
No, it's not.
Investors also care about how much cash a company is generating after all its expenses.
Yeah.
And investments are accounted for.
That's where free cash flow comes in.
Right, free cash flow.
Or FCF, as it's often called.
Okay, FCF, free cash flow.
It's a key metric that investors use to assess a company's financial health and its ability to generate value for shareholders.
So what is this free cash flow?
Well, it's essentially the cash that's left over after a company covers its essential operating expenses and capital expenditures.
So it's like the money you have left over at the end of the month. After you've paid your rent, your bills, put some money aside for savings. It's the cash you have available to spend on fun stuff.
Or, in Oracle's case, to invest in new initiatives, pay down debt, or return to shareholders through dividends and buybacks.
Exactly. And Oracle has a history of generating strong free cash flow.
They do.
Which is a positive sign for investors.
It is.
It means they have the financial flexibility to pursue growth opportunities, reward their shareholders, and weather economic storms.
That's the key. Got to be prepared for anything.
Wow, we've covered a lot of ground today.
We have.
From balance sheets to revenue streams to cash flow.
The whole enchilada.
It's amazing how much we can learn about a company.
I know, right?
Just by examining their financial statements.
It's like a financial detective story.
It is.
We've been following the clues, uncovering the hidden gems in Oracle's Form 10Q.
And I think the key takeaway here is that Oracle is a company in transition.
They are definitely in a state of flux.
They're shifting their focus to the cloud.
Big time.
And they're investing heavily to support that growth.
Got to spend money to make money.
They're also making strategic acquisitions, rewarding their stockholders.
Keeping those investors happy.
And managing their cash flow carefully.
Yeah, they're playing a long game.
It's clear that they're not afraid to make bold moves.
No, they're not.
And they have the financial resources to back up those ambitions.
They've got the firepower.
But they also face challenges.
Right.
Like that intense competition.
Yep. The cloud market is a battlefield.
In the cloud market, and the ever-present uncertainty of the global economy.
Macroeconomic forces are always a wild card.
Right. It'll be fascinating to watch
how
Oracle's story unfolds in the years to come.
I'm on the edge of my seat.
Will their cloud strategy pay off?
Good question.
Will they continue to make shrewd acquisitions?
Time will tell.
Will they maintain their commitment to stockholder rewards?
Who knows? The future is uncertain.
Only time will tell.
That's the beauty of it.
And that's the beauty of investing, isn't it?
It is.
There's always an element of uncertainty. Well, but by doing our research and understanding the fundamentals,
absolutely,
we can make more informed decisions.
Couldn't have said it better myself.
Well said. And on that note, we'll wrap up this episode of The Deep Dive.
It's been a pleasure.
We hope you've enjoyed our exploration of Oracle Corporation's financial landscape.
It's been an adventure.
And we encourage you to continue your own research.
Yeah, keep digging.
And stay informed about the companies that interest you.
Knowledge is power.
Until next time, keep diving deep.
See you next time.